Now let's get you the business side of things during Nigerian President Muhammadu Buhari's state visit to China. Several deals were hammered out between the two countries. That includes fresh credit lines and, of course, currency swap agreements. But what of the details? Well, CCTV's Ramah Nyang has those details for us.
Now, to properly understand the deals that have been arrived at between the leaders of these two countries, it's absolutely vital to understand the context in which they're being struck, especially the domestic context in Nigeria. Let's start with the headline numbers. At about $30 billion, the budget for the 2016 fiscal year is Nigeria's largest to date, and funding it will require a heady mix of local and foreign funding. Now, nearly half the budget, about $13 billion, is just basically recurrent expenditure. Capital expenditure at about $9 billion, however, stands to gain the most from foreign sources of funding. The thing is, though, it is not clear at this point in time exactly how the budget deficit, estimated at about $11.1 billion, is going to be filled, and the details are trickling in very slowly. So, for example, we know there's a $6 billion loan on offer from China to fund infrastructure projects. That could go a long way to fill that hole, but there's still several missing details, like, for example, the price of said debt, and if it's all coming in one shot or if it's going to be dispersed over several fiscal years. Panda bonds, which are basically yuan-dominated fixed-income instruments, have also been proposed by the Finance Minister, soon, although it's not clear exactly where they fit into the funding matrix. What we do know, though, is that the Finance Minister believes that they are cheaper relative to Eurobonds. Now, a deal was also signed between the Industrial and Commercial Bank of China and Nigeria Central Bank covering yuan transactions. Now, the simplest way of explaining it is that it'll make the flow of yuan among different banks in Nigeria a lot easier. And of course, the question then from that point is, what scale will it have on the economy? The thing is, this deal, as interesting as it sounds on paper, will be limited by three main factors. You see, most of Nigeria's external trade is done in dollars, and that includes sales of its main export commodity, oil. Between 2013 and 2015, roughly a fifth of goods imported in Nigeria came from China, but less than 2% of Nigerian exports went to the Asian economy. Now, to put this into perspective, you're looking at the export of about $7 billion of capital every year from Nigeria to China. The bulk of that is denominated in dollars. Most importantly, as long as the Central Bank of Nigeria's restrictions on foreign currency access remain in place, this deal cannot be a silver bullet to the Naira's current weakness.